Forex market offers incredible opportunities for profit. But despite its potential, a large percentage of traders fail to achieve consistent success. So, why do so many traders struggle? In this video, we'll break down the main reasons why Forex traders fail and how you can avoid these pitfalls. Let's get started. So, let's first take a quick look at success rates. Only a small percentage of traders make consistent profits in Forex. Studies show that about 10 to 20% of traders achieve long-term success. For example, a report from the National Futures Association found that around 20% of traders are profitable. Another study by Francis AMF showed that only 11% of traders managed to earn consistent profits. So what's the secret behind this small group of successful traders? Well, it comes down to three main factors: continuous learning, effective risk management, and analyzing failures and improving strategies over time. Now, let's dive into why so many traders lose in the long term. First up, lack of knowledge. Many traders jump into the market without a solid understanding of market analysis or trading strategies. Without the right knowledge, making informed decisions becomes impossible, and that leads to losses. Next, we have the absence of trading plan. Failing to develop a clear and cohesive strategy increases your risk. A solid plan helps you stay disciplined and avoid impulse decisions. The third reason is emotional trading. Traders who let their emotions take over often face serious losses. Whether it's fear of losing money or greed after a win, emotional decisions lead to poor capital management. If you can't control your emotions, you'll struggle to succeed in Forex. For example, fear may lead to cutting profits too early or avoiding trades altogether, while greed can lead to over-leveraging or taking unnecessary risks. Moreover, the inability to accept small losses can lead to traders to hold on to losing positions for too long, draining their capital. Managing emotions and maintaining a disciplined approach is crucial for long-term success. And here is another common reason for failure: misusing leverage. Leverage can indeed amplify profits, but it can also magnify losses. If you're not careful with how you use leverage, you may end up finding yourself in serious financial trouble. Finally, let's talk about strategic issues. A solid trading strategy should be based on both technical and fundamental analysis. But many traders struggle with the market conditions, or they keep switching strategies without fully committing to one approach. This lack of consistency can result in losing trades. So, in conclusion, the Forex market offers countless opportunities for profit, but success isn't easy. The traders who succeed are those who have the knowledge, the patience, and discipline to manage risk and keep emotions in check. So, how do you avoid the common failures? Keep learning, stick to a plan, and always be ready to adjust your strategy when needed. If you're serious about trading in the Forex market, remember, the road to success isn't about quick wins, but about consistent effort, education, and managing risk. Stay disciplined, and you will increase your chances of success. Thanks for watching this video, and I hope to see you next time.